Welcome back. Retailer Nordstrom is winding down its Canadian operations, announcing it will close all of its 13 Canadian stores with plan to start liquidation sales around March the 20th. The Seattle-based company says Nordstrom's Canadian business has lost money every year it's been in operation. Let's bring in David Swartz, senior equities analyst at Morningstar. I referenced him as a consultant. He's not a consultant. He's an analyst at Morningstar. David, thank you very much. What's driving this? We'll talk about the broader Canadian retail landscape, because this by no means is the first U.S. retailer to decide to pack it in this country. But let's first begin with a Nordstrom-specific conversation. Why has Nordstrom made this move?
Nordstrom went into Canada in 2014, and it had struggled to make the business profitable. It started out quite slowly, just opening a couple stores a year. And then when the pandemic hit, it really took a big bite out of the business. Many of the stores that Nordstrom operated in Canada were dependent on tourism. For example, their store in Vancouver at one time was one of the 5 biggest stores in terms of sales, but that was largely based on tourism from China. And then when the pandemic hit, tourism really fell off, and that affected that store. Nordstrom had highlighted Toronto as one of its key markets, but apparently decided that there was no path to profitability.
And now the company has actually raised its financial guidance. One reason it's doing so, in my understanding, is it's telling investors and analysts we're closing down Canada, and that's going to boost our financial performance. All publicly traded companies, of course, are under pressure to display profit growth. How much pressure was this company under to boost profit and perhaps take this decision as a result?
Nordstrom's had a lot of problems recently. The issue in Canada is really just a small issue compared to Nordstrom's much bigger problems. I think it was seen also as a distraction to the management, because the company's problems really run deeper. Nordstrom Rack, especially, which is about 1/3 of its sales, has had very poor results in the last couple of years. And Nordstrom really needs to focus on improving that business. And I think the management thought that the expansion into Canada was really more of a distraction.
And so what is it about Canada? Target, Lowe's, and Nordstrom, among others, have decided that they can't make a go here. They wanted to. They saw opportunity in this country, and each of them decides to go.
Yeah, I also cover Ulta Beauty, which also wanted to expand into Canada and then sort of abandoned the effort after looking at the market more closely. I think it's just that there's a lot of entrenched competition. I think when Target went in, you already had competition from Canadian Tire and Walmart. That those retailers took a lot of the top real estate, and that affected the location of the Target stores. Nordstrom, I think, was also having some difficulty finding the best real estate for its intended stores, and it just lacked the scale. It would have taken some more years and more store openings to get the scale necessary to be competitive with traditional Canadian retailers, like, of course, Hudson's Bay and others that are already there. So, it was going to be a difficult competitive process and probably take longer than originally expected.
And Nordstrom is under pressure from an activist investor, I understand. A company from Mexico, a department store operator there, has acquired a nearly 10% stake. And Nordstrom, I believe, adopted a poison pill as a result. So talk to us about the kind of pressure that Nordstrom is under to deliver better results.
Yeah, about 6 months ago, a Mexican company called El Puerto de Liverpool bought about 10% of Nordstrom. Now, the company has said that it is not an activist investor, but it is kind of interesting that they're in the same business because El Puerto de Liverpool runs department stores in Mexico. And after that, Nordstrom, apparently unsure of their intentions, adopted a poison pill. And then more recently, there was a report that Ryan Cohen, who of course is a well-known activist investor, was also buying Nordstrom shares. Now that report has never really been confirmed because Cohen himself has not said anything. I don't think that Nordstrom is a great candidate for an activist because the Nordstrom family not only manages the company but also still owns 30% of it. So there's no realistic path for a hostile takeover or some other changes to the board without the family's go-ahead.
I know you're not a real estate analyst, but I'll toss this one your way anyway. This is not good news for mall operators around Canada, losing after Bed Bath & Beyond has recently decided to pack things in as well. Now, Bed Bath & Beyond is a different story. It's closing down in the U.S. as well, so it's not a Canadian retreat. It's just a full corporate collapse. But this creates empty space in shopping malls. What's your best sense of what a Canadian mall owner does trying to fill space left by Nordstrom?
Well, of course, the U.S. mall owners have the same problems. Nordstrom did close 16 stores in the U.S. in 2020, so it has downsized in the U.S. as well. A lot of those retail spaces will not be retail in the future. They're going to be changed into other things, mostly housing, but you're also going to see other types of retail, like grocery stores, for example. You may see other completely different uses in the U.S. We've seen empty spaces turned into churches. We've seen them turned into colleges, like for-profit colleges and other educational institutions. So they're not being used for retail at all. And that's probably going to be happening in Canada too, because there's just too much retail with so much online sales now. There's just too much physical retail in North America.